Good day traders, welcome to another week and another technical market overview. Today we will be looking at how some of our calls played out last week and also how to approach the market this week. If you haven't signed up for the RMDTRADER training competition yet, where you stand a chance of winning the opportunity to trade a $10,000 fund account, then I suggest you visit the link in the description below. Let's get the disclaimer rolling and I will see you back in the charts. We start by looking at the US dollar to South African rand. Last week saw the rand continue to strengthen against the dollar with price quickly breaching that diagonal support and then reaching the short target that we mentioned last week at 1453, which is also the monthly S1 pivot. Price is currently trading at the January lows, as you can see, and that would probably mean that we could be looking at one of two scenarios. So either we would perhaps follow the same pattern that we saw in January with some consolidation, and that could be followed then by a break higher, putting into effect a larger double bottom play and seeing, of course, the rand weaken against the dollar. Alternatively, if price continues to break lower, that could see price move into the lows from January 20, that's last year, near this 14 rand to the dollar level. Of course, we do have some levels of support in between, but not too much, meaning a move into this area could happen rather quickly. We are moving on now to the Euro USD. We ended up seeing an extended correction last week, well above the area that we initially expected, being the 4-hour 100 SMA. Instead, we saw price move into the area rather of the 4-hour 200 SMA, where it then found some resistance. Currently, we are still trading above the 4-hour 100 SMA and also above the new weekly pivot. So I'd say any break above the weekly pivot could then see a continuation of this head and shoulders pattern. And as you guys probably know, a head and shoulders pattern remains valid as long as the right shoulder does not get taken out. And as we can see, that has not yet happened, meaning that should we see price close below that 4-hour 100 SMA and the weekly pivot, price could then head lower towards the full head and shoulders target that is at 1.78. That is quite a long way down, meaning there would be some support in between. Some initial support could be our weekly S1 at 1.204, as well as that monthly S1 at 1.200, and I believe the monthly S2 support is also at about 1.188. Having a brief look now at the economic calendar for the week. Today is President's Day in the US, so no markets would be trading in the US today. And then you can see we have a few events on Wednesday at about 3:30, some core retail sales. Thursday, we have the employment change, unemployment rates for Australia, as well as unemployment claims for the US. And on Friday, a bunch of data coming out in the European Union, as well as in the UK, affecting the GBP, as well as manufacturing PMIs of the US. We are moving on now to the GBP to the USD. Last week saw that break of the range that we discussed and then saw price heading straight to our target area that was between 1.383 and 1.387. The trend thus remains bullish with resistance once again, where we will see price meet up this upper diagonal channel, likely towards the weekly R1, which is currently sitting at about 1.391. Initial support would be our weekly pivot, and that is at about 1.379. We also have our 4-hour 50 SMA that will be acting as some dynamic support. A break below that could see price move towards the lower end of this channel, which is indicated by our 4-hour 200 SMA, and that could be in the vicinity of perhaps that weekly S1 pivot at 1.372 and at this area of 1.367. We are moving on now to the Australian dollar to USD. Last week we mentioned to keep a close eye on that overhead diagonal, as a break above it could see price head to the target area of 0.777. As it turns out, the high from last week were at exactly 0.777, and this break implies a possible bullish trend reversal, or rather a bullish continuation looking at the larger picture. The 4-hour 200 SMA near 0.771 will now become support with initial bullish targets at a weekly R1 pivot at 0.780 and an extended target at the weekly R2 pivot near 0.784. We are now having a look at the Nasdaq. The bullish trend has shown no signs of weakness, with a clear break higher on Friday despite a more lackluster start to the week. The bullish targets remain somewhere between the weekly R1 at 13,950 and our monthly R1, which is at 14,110, which is also very close to that overhead diagonal channel that we've been using as a reference so far. Initial support can be found at 13,625, with a break below that possibly seeing a correction somewhere between our monthly R1 at 13,500 and that weekly S3 pivot, which would probably coincide with our 4-hour 200 SMA around about 13,325. Having a look now at the DAX. Price action last week was mostly flat, with the 4-hour 50 and 4-hour 100 SMAs holding up, meaning the bullish trend is still very much relevant. Any bullish price action above the current levels will likely see price move higher towards the area between our weekly R2 at 14,355 to about 14,450, which is the monthly R2. Support is where the above-mentioned moving averages converge with our weekly S1 pivot at 13,865, and a break below that could potentially see a correction somewhere between our monthly pivot at 13,620 and that weekly S3 pivot at 13,525. We are now having a look at gold, and we are looking at it from the daily time frame. Last week once again saw a retest of the very important 1,850 level. That level also currently coinciding with our overhead diagonal. Without a clear and strong break above this level, the bearish trend will remain intact. There is currently some support at 1,810, with a breach of this level possibly seeing a correction towards 1,780, which is the monthly S1, and that could be followed by a test of support at 1,750. If there is a strong bullish close and break of that important 1,850 level, the area between 1,905 and 1,935, which is our monthly R1, could potentially be an area to consider for that bullish break. We are now concluding this week's technical market overview by looking at Bitcoin. As I've mentioned last week, a break above that 40,700 level will likely see a test of the area between our yearly R2 pivot, as I can show you over here, that was at 46,000, and our monthly R2 at 48,570. This ended up being quite accurate, with price even consolidating within this area. Currently, we can see price is breaking above this range, with the next bullish target somewhere between our weekly R1 pivot at 52,800 and our monthly R3 at 55,100. Currently looking at support, the 46,100 level will act as support, with a break below that likely seeing a correction towards 40,800 to 40,900. That is where we have our monthly R1 pivot, as well as that 4-hour 100 SMA coming to offer some additional support. A break below that could then see price perhaps move lower towards our 4-hour 200 SMA and that horizontal support level at 37,500. That concludes our technical market overview for the week. Please remember to like and subscribe, and until next time, this is John Jacobs for RMDTRADER. Remember, trade smart and trade successful.